What's going on? Welcome back to the channel. Today we're going to talk to you about SoFi. Today was the big day, the Q4 earnings. I want to give you the good, the bad, and the ugly, as well as break it down on what the hell happened today. Before we get into any of that, make sure to hit that thumbs up. And with that, let's get right to it. So SoFi went down 6.36%, 25.47 the high, 22.31 the low, and just over around 131 million shares were traded. So today was a crazy day, and I can already tell a lot of SoFi bulls are very frustrated about how today played out, because even during the pre-market, it was up about 8.04%. So things were pretty hot because they did, for face value, beat on their top and bottom line. Just their future guidance was not necessarily the best. And I think a lot of bears, given the circumstances as well in the market, we're kind of reading between the lines. And this is something I, again, kind of mentioned in my video yesterday, but we did get a couple new analyst ratings. Most likely a lot of them are going to be posted over the weekend, so that'll affect Monday. But we did have Dan with Mizuho, $38 buy. So that is officially the highest rating now out there. And then you did have a buy from William Blair, Andrew Jeffrey, who has a 62% success rating. So that's good. As a consensus over the last 3 months, 27.06 is that price target, and that does represent a 18.36% upside. So when it comes down to today, this is going to be a long speech because there's a hell of a lot of things that really affected it, but we did start off the morning with PPI, and it came in at 0.5, forecast of 0.2. Didn't really influence the market all that much, but this did really signal that inflation is still a little bit sticky, so not the greatest, right? Of course, we did have a lot of pre-existing fear that was starting from Powell, unfortunately. So a lot of people were still kind of figuring out what that means for the broader market, and even in SoFi's guidance as well, that is most likely did affect that. But we also did have the market really still talking about AI bubbles, and a lot of that stems from Microsoft's earnings. So you kind of had a lot of that rolling over into today. Plus today was the last trading day before a government shutdown. So that's going to be midnight tomorrow. And so that is, again, causing us a lot of fear. Historically, what happened last time, we had 1 or 2 very red days, and then we forgot about it and we just moved higher. This time around, we have a lot of other things as well that's kind of piggybacking off it. So a lot of snowball effect. And I did see some rumors about how this weekend Trump is going to attack Iran. So generally, he likes to do those types of things on like a Saturday or Friday evening. So that was Venezuela, even Greenland, and a couple other things. So I wouldn't really be surprised. So this is where some institutions, if you kind of figure that is going to happen, then you're going to kind of exit, right? Plus, at the same time, we did have a lot of people, a lot of bears really piecing together what is happening on the commodity side, similar to '08. So a lot of things are just kind of snowballing. In my opinion, it might be very unpopular opinion, but I think that today was just a very unjustified sell-off. But I think the market's been somewhat mixed, right? As I've openly said, the market's always forward-looking. It wants to kind of fixate on the next big catalyst, and unfortunately, Powell popped that likelihood. So now we're kind of left wondering what the hell the next catalyst is. And then we have now followed by Microsoft, their future guidance, and then all this other stuff. Well, we're going to go down because of that. So that's kind of how things did play out. In SoFi's case, their earnings, they did beat on their top and bottom line. We did officially have the first time ever 1 billion in revenue in a quarter. So that is deserving of a round of applause, plus 1 million members. So that's, again, a good thing. Product growth, solid double digit, better than year over year from the previous. Same with just members, everything went up. And I'm not going to waste your time and go through this because you guys can all see that. But I'm sure some of you want to know exactly why SoFi did truly go down. So there was a couple of things. So this right here is some of the risks and concerns. And I think a lot of it stems from personal loans. So ultimately, when it comes down to their lending, they obviously, again, similar nature, double digit, solid stuff, but they are still very fixated on personal, student, and home. And their home, I think the momentum behind that is very much dependent on rate cuts. And given the circumstances, that didn't seem too optimistic. So I think home growth is going to be very stagnant. That's what a lot of Wall Street would have interpreted SoFi's earnings as. They did also mention that there is going to be a lot of spending. So 2026 is going to be a lot of spending. So I think in general that results in maybe more dilution. I know that's everyone's kind of favorite thing, unfortunately, but that's heavy investing. Like, I guess that's one of those double-edged swords, right? Investors can't expect good product without spending additional money. SoFi was somewhat cautious about crypto. So they did kind of reiterate about the Q1 being for their stablecoin. They're really going all in on crypto, but at the same time, there was a certain level of hesitation, a certain level of uncertainty surrounding that. More on the regulatory side of that. So I think probably the bears really focused on that. Even though a lot of bulls, and I generally did like it as well, their smart card, I think given the recent updates, like 5% grocery rewards is rather high and potentially could be seen as not really kind of stable. So that, in my opinion, was some of the things that was really brought up. No credit quality was discussed at all, so there was no commentary on any delinquencies or charge-offs. So that's kind of, again, some of the things that was really brought up. So you can kind of go over this as well, just about macro assumptions, and even unemployment is being assumed where it's going to be 4.5% to 5%. So that's some of the negatives that most likely did attribute to SoFi pulling back over and above just generally the market crap. So over the weekend, I'll do a little bit more of a deeper dive in their earnings, but for face value, that was some of the negatives of their earnings. But still, they had some very solid growth. And again, I'm not going to waste your time and just go through this because, yeah, it's pretty standard stuff. People want to kind of know what the hell happened behind the scenes. Aside from that, though, shorts did return 362,000 shares. 9.2% of the free float is being shorted. Works to be 114 million shares. So I like to analyze this because shorts could easily double down. And I cover stocks, a lot of different stocks, different YouTube channels as well. And honestly, SoFi was one of the only ones where shorts returned. So that, in my opinion, does show that SoFi's sell-off was not really justified. I did actually midway throughout the day sell a $23 put, and I was willing to buy it. So given where it did close at, so at 22.81, looks like I'm going to be buying, I think it's 500 more or 600 more shares at $23. So pretty much a win-win, and given the premium I did receive, it's pretty much putting me at already at break even. So I'm good with that. So let me know if any of you did buy the dip today, and or potentially if you guys traded options. But definitely very bullish stuff, the fact that shorts did return, because there is more than 10 million shares available to be shorted on a side note. Aside from all of that fun stuff, with it closing at 22.81, it is smack dab in the middle between this S2 and this S3. So 22.01 and 24.01 is going to be the next strong support and target. And this is something I did mention, that if this 24.01 does break, then you could see kind of a significant sell-off. But aside from that, looking at the options, today we had 76 million in calls, 52 in puts. So this is kind of back to the norm for the values, at least. But still, there was 14 million or 14.5 in negative net premiums. So it looks like, yeah, big money was kind of liquidating, getting out. And not only that, they are assuming that more downside is coming. So 48% of all the options being done were bearish in nature, with today being Friday and us closing at that 22.81. So that is the 22.50 and below strike prices are in the money. So regrettably, you're not going to see any gamma squeeze at all. And so a lot of this, if SoFi was to have closed, let's say around that 28, then yeah, you could have saw a nice push going into next week. But given where it closed, no chance at that. Unfortunately, these are all the transactions that did occur on the secondary market above $100,000. So this is why, again, very misleading. How a lot of algorithmic trading was really moving SoFi through clearly just macro events, and you can kind of see that right here. So the flow, very much smaller transactions, so algos were really moving it, whereas if you look at this, big money was buying. So big one for today, 82.5 or 82.2 million. 13.8, 11.4, 11.4, 3.4, and so forth. And it's kind of funny. I always sometimes in my thumbnail just put down big money bought the dip and stuff, and that seems to be a very big trigger for people because, again, I guess it kind of makes sense, right? If you see a stock go down 6+% and you see big money bought, like people like, oh, that's clickbait. But this is why algorithmic trading, hands down, I don't think people actually understand how powerful algorithmic trading is at this day and age. It's just, they seem to have really stepped it up over the last 4 or 5 months. But big money did, if you actually look at this, did buy the dip. Aside from that, these are some of the transactions that did occur on the dark pool. So nothing too crazy. So big one was 3.5, 3.2, 2.7. So this was kind of quiet. So most likely hedge funds and, again, shorts didn't really do all that much. Aside from all of that fun stuff, getting back to the chart, there was going to be one of two scenarios that was going to play out today. We were either going to test that 50-day moving average again, or we were going to really consolidate. Initially, I thought to this 2350, but clearly that wasn't strong support whatsoever. So luckily enough, it did bounce off of this 200-day moving average. So 2231 was a low, so kind of crazy stuff. So that's going to be another key level to really watch for next week. Because if not, then yeah, you could see pretty much a very similar price action to what happened in April of 2025 when it just went down and down. So again, this is where people are jumping to a lot of conclusions, and so we might be potentially here in that type of scenario. So let me know your general thoughts. Do you think we're going to be seeing a crazy sell-off, or do you think this was a optimum time to buy? So what's your kind of viewpoint on all of that? And yeah, what's your kind of honest thoughts on this, like SoFi's earnings? Are you bullish, leaning towards bullish? Do you think that the market was right to focus on the negatives, or like, what's your kind of general thoughts on all of that? One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades, worthwhile to pop over there and check that out. With all that, appreciate all of you watching.